Welcome. Welcome, everyone. It's Angelo Robles, and welcome to At Family Office and for my members of my private community, SFO Continuity. I know you heard me say it before. I'm going to say it again, and I always mean it. What a special guest we have on today. And I'm titling this, and please understand our guest is very humble. This is me doing it, but really meaning it. The best macro strategist alive. And I really mean that. Versus 81 questions. Now, are we going to get to 81 questions? I really doubt it. Unless Jordi could give the most concise answers of all time. And that probably is asking too much. But our special guest today, and I think a third-time visitor, Jordi Visser, Visser, heads AI Macro Nexus Research for 22V, a product he developed to equip investors with a framework to tackle intertwined dynamics of AI-driven innovation and economic transformation. He is the best. He's blown up all over social media. We're so lucky to have him for 90 minutes. Jordi Visser, welcome back to the show.
Angelo, it's always a pleasure to be with you.
Well, you're very kind. And on that note, since, I don't know, we have 81 questions. If we get to 30, that will be impressive. But why don't we get to it? Because I have so much on my mind, and you're the right person to have on. Why don't we start? You sit at the intersection that I don't know, like I don't know anyone else who does. Meaning you're a world-class, my words, macro strategist, but you're a hands-on AI builder. That's the key part. Which discipline corrects the other more often?
At this point, the domain experience is there, but the domain experience in terms of the nuances gets better every day because of using AI. And that's actually a great place to start for people who are I know your clients all have domain experience in something. The easiest way to see the power of AI is actually to gain more nuance in terms of the details and the depth of your own domain experience by having dialogues with AI on a regular basis about it. And let me just give you an example. I've spent my time studying markets, studying economy, studying the way stock markets move in relation to economics, how they lead. The best indicator, I agree with Stan Druckenmiller, the best market economist is the stock market itself and how it's moving. To be able to ask questions, and I'll end it here with just an example. Before I got on here, it's very interesting to me that Apple, everyone on your show right now watching owns Apple. Apple made its all-time high on June 8th, I believe. And on June 8th, intraday, that was when they told the world about Siri, AI Siri. The stock traded down, and then it traded down sharply. And then 2 weeks ago, they came out and said they were going to have to raise prices because of memory, and the stock sold off 6%. So it was effectively more than 10% off the all-time highs. And in a matter of 10 more days, it went right back up to the all-time highs. So it has handled bad news, and there's something important going on with Apple. So before I came on here, as someone who doesn't have the time to go read every research report, I spent 20 minutes on AI collaborating with Grok, with ChatGPT to get all the details on the bigger picture of Apple, not just the minor stories. So that is some way that I never could have done that in the past. And I now can talk about Apple in greater detail today.
Related to that, I heard you state, and again, you mean this from a sense of humbleness, but it's a truth, that you almost never met an other macro strategist, most of them, let's be honest, that we would know over age 40 or 50, who actually uses AI, not just investing potentially in one of Jensen Huang's 5-layered cake of AI. We'll get to that, but actually using, so an entire profession of people that are resistant, that maybe have ego, and they're commenting about bubbles and everything else when they're not actually using it. Like, what are they afraid of?
They don't need to use it in their mind. So again, the benefit of AI is for people who are curious, for people who enjoy building stuff, who enjoy learning new things. I wrote a piece this week on unlearning the Fed. And this was all about the fact that there's this thing called Fed watchers. And economists break down every FOMC statement. What are they going to do? Are they going to cut? Are they going to hike? Are they dovish or hawkish? And I wrote a paper that said, here is what me working with AI will give you what Kevin Warsh said at his 2.5-hour confirmation hearing that overlapped with an interview that he gave last week. Now, the key thing about these two times, they happened around the latest FOMC meeting. So everyone is doing a Fed watching on what came out in his press conference when he gave two long form transcripts that you can break down. And if you go to AI and say, give me the overlap between these two transcripts, it basically says he believes AI means the Fed has to change. It can no longer be the same way that it was because anything that happened in the past is no longer useful today. So that is an example of a Kevin Warsh who recognizes in the job that he has to be more dynamic and using AI and thinking about AI when it comes to labor, when it comes to inflation. And that was part of the reason that he was hired. And those are the answers that he gave. So I wrote that paper just to remind people that if you're reading an economist who doesn't use AI and doesn't have the ability of doing this, you're actually not getting useful information and you're going to be led astray.
Which honestly, again, Jordi, my words, not yours, 99.9% of your macro strategists are not actively really using. At minimal, they're talking to AI badly at that. They're not actually building. Jordi, so far, is the one exception that I know. Let's stay on that theme just a little longer. If a strategist hasn't felt AI's true power, including building, how can he or she forecast its impact on productivity at all?
Angelo, you couldn't have said it any better. And it's actually, it's the reason why I don't do as many meetings as I used to. I only do meetings with people who are trying to learn about how to use it. And if they want to just take my word for it, I can speak on this, this conversation between you and I. If it went astray and you just asked one question, said for the next 80 minutes, could you talk about how there will never be enough supply of compute for the demand? I could do that for 80 minutes. I could go on and on because I have asked so many questions and gone through it. The problem is if you don't use it, you can't possibly understand the power of it. So I was just in a conversation this morning with a client who reached out and said, how is this not the same as oil? We took a lot of CapEx, we drilled a lot, we got more oil, the price went down, and then all the oil stocks went down. How is this not the same thing for the hyperscalers? And I responded back very quickly with literally no delay. And I like the guy. He's a good thinker. He was just throwing it out there. And I said, here's the problem. Oil demand is linear. It grows by a very, very small band every year, which is nominal GDP. That's the way they calculate the more oil we need. The problem is the growth of token needs is exponential. It grows at a pace that cannot be measured. The capabilities of the models are growing at exponential pace. So I'm still paying, as I'm sure you are, $200 for your models. I haven't got to the point yet where I've had to increase my token usage because I'm an efficient user, but the model capability compared to last year is insanely better. The only way that you can know what you can do today versus a year ago for the same amount of money is to be a user. Otherwise, you fall into the trap of token prices are going down. This must mean that the debt is going to be an issue. And it's just a very different story than what people recognize.
And for the audience who wants more of the technical deeper dive into AI, and Jordi doesn't give many 90-minute discussions, we're very fortunate. I promise we're getting into that. Kind of building upon what Jordi just said, I would say October of last year, not even a year, was at maybe 4.5 Opus is where things started to have a really aha moment. You then had the Gemini version around Thanksgiving that I thought was huge. But really the last 3 months, look at today as we're live and recording with GPT 5.6. Now Fable 5 has been about a week and they extended it for a quote unquote for most people. Look at a month ago, dynamic workflows. There's been an incredible surge of capability. And for those of you that typed in a sentence, didn't like a response a year ago, and said this is no good, you do understand it's 3.5 years old. 3.5 years old. And the last 8 to 9 months, like Jordi said, I'm just wasting words being too verbose. It's been a massive difference. Jordi, changing directions just a little bit. You got to get some curveballs. A Stanford economist said it plainly. College teaches you 80%. The AI already knows. So what really is the 20% precisely? This may be thrown not just at the education system being upended, but also young people from 18 to 22. And why don't I leave it there as more open-ended and allow you to expand?
So I think I'm going to give people a view as someone who started managing people in his 20s. So I was very fortunate to climb the ranks very quickly at Morgan Stanley. I opened an office for the firm in Brazil in my 20s. So I've had hundreds of people over about a 30-year period that work for me at any given time, and at some point even more than that. And the reason I bring that up is not to brag to you. It's because that is school to me. I was taking people, for the most part, that either were coming out of school or people who had come out of school, say, a decade earlier. The difference between the people that got better, that learned more, is that word I said at the beginning, their curiosity, their insatiable desire to learn new things. Critical thinking is the most critical part of AI. I am a curious person, but I think I focus a lot on thinking about problems from a mindset that I've written about in the past. And if people want to just, use one famous person as an example, Sherlock Holmes is the type of approach of using AI that is very different than college. It's an observational thing. It's a questioning thing. It's not falling into the trap of memorizing everything and just regurgitating what you got from a book. It's taking what you're learning and connecting it to other dots. The great thing about artificial intelligence is right now the IQ is absolutely above 140. That means you're talking to the smartest person most likely that you've ever sat in front of. And you should be asking lots of great questions and connecting dots. It's a polymath. So it's much smarter than Albert Einstein at 160, because Albert Einstein was 160 IQ. But if you asked him about football, he knew nothing. If you asked him about tons of different topics, he knew nothing. AI knows everything. So the IQ is the wrong measurement for it. The right measurement, and this is where the school gets into a problem. School is broken up into silos. You have experts in each different major, each different area. The problem is with AI, you can connect that great professor in biology with that great professor in physics, come up with a question where the two link together, where one theory and another theory are a way to learn both. That is the more powerful way of learning. And that is the way I always say, I'm a mosaic learner. I take a concept, I stick it in what I have in my head, and then I get 50 new ones out of that one connection. That is what AI is powerful with. And so for certain people, they're going to become better and better. And I think we're going to see a higher probability for the younger people going from, say, whatever their IQ is, they're going to expand greatly into other fields and just know a lot more about a lot more things.
And a lot of things to uncover long form here with Jordi, including going over the market, stock picks. We're going to go hardcore related to what you just said. So it's 140 to 150, although a little bit linear IQ, but very broad. Einstein was about 160. Yet the average user, now talk about the user experience. Let's be honest. They use it in its most basic form. They limit themselves to one model. They have no idea what open weight means. We'll get to that shortly. And they're using it to rewrite or draft their emails. They're still talking to it. They're not building. How do they get the confidence to go to the next step?
Well, this is where, you mentioned Opus 4.5 was an important place. And this is the free gift I'm giving to everyone right off the bat. We've seen some consolidation and people worried about compute. You have all of the bear porn out there on we're spending too much money and we're not. What Angelo described for you guys is coding agents. Okay, so that was the first agentic window we entered, but that was purely coding agents. The answer to the question of when are people going to use it, before we started this, Angelo said, "Hey Siri," no response. Then he said, "Hey Siri" again. His computer responded, and my computer responded. So it's not very smart. The second that Siri allows you to do something, and the reason Siri is so important, and the reason Hey Siri is important, right now, if you want to find information at what time a restaurant opens, you have to open your phone, then you have to go type something or speak into it, and then it will give you the time. Eventually what will happen, it'll just be on all the time. And that's when people will start getting better with questions. I cook. I would love to not have to say, hey, I want to create a recipe on how to grill a Wagyu bistro steak. I want to do it on the grill. I want to make a chimichurri. What ingredients do I need to be able to do that? If I could have a free-flowing conversation without having to open my phone, and Alexa can't do this yet, Siri can't do this yet, Meta can't do this with their glasses yet. At some point, for everyone watching, they're not going to have to worry on their work side as much, but it is the voice to text side that becomes the most important. It is the dialogue side. That is what's going to change things. And the reason I brought the coding agents up, it is estimated that it will be a 20 to 30 times jump in compute need once we have that breakthrough moment, which is coming within the next year. So there is no reason to worry about the overbuild. There's no reason to worry about any of this stuff. It just gives you an opportunity to buy into stocks in this side at a discount because people are worried about things which are just not going to happen.
Well, I could say related to that, I believe I've heard you argue that GDP, which goes back, to the 20s or 30s, is somewhat of an outdated metric. At minimal, it's a metric from a more industrial era. And the important part, it doesn't measure everything that matters. Please tell us more.
Yeah, GDP was set up to measure transactions inside a physical world. And the digital world has been breaking away from it. We've had to revise GDP by significant numbers. And we're not talking, a few 100,000. We're talking about hundreds of billions of revisions to say, you know what, we underestimated GDP. And the reason was because this intangible thing is worth a lot more money. Think of things like IP, of research, all of those things. If you've built a business, even if the business isn't good, a lot of businesses sell for a lot of money because of IP. In China, the talk was always that China was taking IP when companies would go over there. IP is a very valuable asset, but there was no way to measure it inside GDP. So as the world has become more digital, as IP or ideas have become kind of the framework, you've had GDP become less useful. We're much closer in looking like a recession than we actually are. That's why every time there's been this recession call since the iPhone came out, they've all been wrong. And we're now on 16 years. And the only time we had a recession is when the government decided to shut down the economy. And then very quickly, we were back to new all-time highs in GDP. So every time you hear someone say there's a recession coming on, they cannot happen. It's impossible for a recession to happen. And the reason I say it's impossible is because the concept doesn't exist the way that it did. We're actually not hiring anyone over the last 12 months. There's been small amounts, but when you aggregate everything, it's been basically zero. If you take out healthcare, it's been negative. So think about that. We've had GDP grow. We've had the stock market go up sharply to the point where people called it a bubble, but we're not hiring anyone. So this is what is happening to GDP, is that as productivity and efficiency start to get remeasured, and the only way that can happen is through measuring the intangibles within inside GDP, that is not useful. And I will just leave it at this. You're going to see a dramatic shift in the next 5 years because that consumer agent thing that I mentioned, more of GDP, the transactions will be done by agents than by humans by the time we get to 2030. Which means when you say into your phone, hey, Siri, I want to go to Italy, go book me the trip. This is how much money I want to spend. These are the days that I care about. Or just go give me 5 options on what it can be and show me all of the details. When it goes and books the trip, it's not going to do it the way you did. It's not going to search the way that you did. It's going to be much more efficient. You're going to tell it, I want to get it at the lowest price, but I want it to be certain types of quality hotels. You're not capable of doing that as well as a computer. And that's the way all transactions are going to be done. So the velocity of money is going to increase dramatically, and it's going to be because of AI agents.
And a little bit of a heads up for those out there. We're very fortunate. Jordi's been very kind at some of my in-person events over the years. Actually, the first time was 2016 when we were both in a little bit of a different life. So I've known Jordi a long time. This September, at my forum, September 15th and 16th, up on my website, Jordi will be a 90-minute, effectively, keynote. We do believe in long form, as you could tell from my digital. We like to do deeper dives. We like to maybe make you, myself, everyone, the audience, a little bit uncomfortable asking tough questions. So learn a little bit more if you're a member, effectively, at my website, angelorobles.com. And we look forward to seeing Jordi then. Jordi, this is one of the questions I'm going to ask you. I always ask you. I think you're getting a little frustrated having me ask it for probably the fifth time now and needing to re-answer it. And I have to admit, I'm having a hard time coming on board to your side, but I want to. I want to. Help me get over. Here it comes, Jordi. The U.S. debt, it's $39 trillion. We have a $2 trillion deficit and growing every year. We are printing money like there's no tomorrow. Our deficit is climbing up, up, and up. And though I don't think you're happy about it, you don't really appear to be losing any sleep. Why?
Very simply, because the total net worth of the country is far greater than the 39 trillion by about 5 times now. Debt is one side of the equation. So if the government right now is allowing debt to happen, and we're having a multiple of that being accrued through countries putting money in here because we have technology, we have the ability of building this, we have a stock market worth an enormous amount of money, of which foreigners own as well. The asset side of the equation is enormous. So it's not that it's not a problem, meaning, okay, it matters, but corporate debt isn't growing. So as the public debt has gone higher, we've seen the stock market go higher without any growth in debt that matters. Mm-hmm. So that is the side of the equation. When I was worried about it, I was worried about it because of the corporate debt and the contagion that happened leading into the great financial crisis. What has happened since then is the debt for the United States of America has completely changed. And yes, it's in the government hands, but you cannot take this. And this is where I differ with people like Ray Dalio, and I've gone through this with you many, many times. If you're using history and you say, well, this will end up just like the Great Depression, that's not the way this is going to end. We are going to end with humanoids. We are going to end with cancer being cured. We are going to end with so many things that people cannot possibly understand. And this is not in 100 years. This is coming in the next 5. So if all of a sudden humanoids are doing all of the work and the cost is going to zero, the debt absolutely does not matter. And that's the whole point of this. There'll be a transference always in what will go on. And most of the debt that will go through the decline, if I went through all of the entitlement issues, and I wrote about this recently because I think it is an important thing to keep in context with the Fed. It's very hard for the Fed to raise rates when they have this issue of the debt and the budget deficit, which is sitting at 5 to 6% right now. And at the same point, the entitlement issue is going to get worse no matter what they do. And so if they raise rates, they're just making it worse. So it's not that I don't believe it matters. I just think it's not going to change what's going on because you have to lead in the exponential side as well, which is going to overwhelm this linear growth.
And I think related to that, besides the fact that the world primarily settles in dollars, that plays to your advantage as well. Look at a country like Norway, which, by the way, is a capitalist country. Watch my cowboy hat video from yesterday relative to talking about socialism, Mamdani, all that. But I don't want to get sidetracked, but it relates to that, Jordi. They're sitting on a $2 trillion sovereign wealth fund. Look at the giant sovereign wealth funds in the Middle East and around the world. Where is likely 80% or more of their capital coming to? Here in the U.S., in our markets. Explain how that maybe confirms what you said, that maybe I'm worrying a little bit too much about the debt.
We need, so I think the best way to put it, let's view every country as a company. Which country right now would you want to be taking debt right now? The ones that are producing the newest and most innovative stuff. So that's who you want to take the debt. we're taking the debt to help this grow. When we put the AI action plan into effect last year, this was to win the race in AI against China, but this was also to make sure that the Norwegians and the Europeans would be needing to buy our stuff. You don't have Ukraine. This is all about innovation and technology. Every single thing that people need to purchase at this point, whether people like it or not, in terms of the advancements of technology and now artificial intelligence, we are so far ahead. If I asked you when you said the best models, these are all US companies. There are no frontier models that are in the cloud that compete with the US models. None. China has open source models. That's a completely different thing. And for those, they're just distilling our models, again, that IP situation, and recreating a version which is 6 to 9 months behind. But if that's what you were viewing it on, who would you allow a company to take debt? You would want it to be a company that was growing their revenues and their earnings extremely fast. And the US is dominating that and has been dominating that since the iPhone.
A fellow macro strategist, she hasn't been on in 5 years. I got to reach out again. Lynn Alden says the best product Coca-Cola ever sold was its bond, or bonds, not Coca-Cola. Borrow it too, while money supply grows at 7. Buy scarcer assets with the spread. Right or wrong, Jordi?
I love Lynn. So I was listening to her this morning on an interview with Natalie Brunell. So
Sure.
Yeah, I've listened to 4 podcasts so far this morning, and Lynn Alden happened to be one of them. Lynn is great, and she simplifies things in a very, very simple way. And that is just a very simple way to go through it. And I do believe that as people start to think, I've said this before at your events, I don't go into a lot of details on it, but my whole AI macro nexus is the connection between the macro or TradFi history, everything that has happened in the world up until 2022, the impact that AI is having as it becomes democratized and as it just starts to impact all of our lives, and the eventuality of consumer agents and humanoids starting to get into the world of crypto and the financial guardrails changing. The capital structure of the world is changing. And so this whole concept of what bonds are used for and the Coke thing and everything along these lines, it's just changing. And that's why when you look at the debt, if there was a serious problem in our debt, I will say it to everyone, we would not have 10-year rates at 4.5%. We would have them at 12, 13, 14. You guys remember what was happening in Greece? I lived in Brazil. I opened an office during the 1997 to 99 period. When you have a debt problem, your bonds trade at 20 cents in the dollar, 30 cents in the dollar, 40 cents in the dollar, not with rates at 4%.
Staying somewhat on that theme, money supply, and your friend Raul Paul has spoken about this as well. Money supply grows at 7% a year. The average raise maybe is 2 or 3%. That's a silent 4% annual tax everyone paid in salary. Is that gap not inequality, not ideology, but the real engine of the political rage that we're now watching take place?
Yes. So I do believe this is a combination of things, but I definitely so it's good for people who take risk. And again, I joke about this with retail traders who are getting, saying they're creating a bubble and this and that. And I just look and I go, no, the institutional people I've known for a long time have already made millions of dollars. The problem is they have no reason to gamble. They have no reason. They get no joy out of it. If you're going to go to a poker table and the hands are $5 and you're worth $20 billion, you're not going to really enjoy the game as much as you would as if a hand was $1 million. And that's what ends up happening with all of this stuff in terms of the money supply and the way the distribution of wealth has fallen out. If you don't have an education, it's very hard to embrace AI because you didn't go to school and didn't have the ability of spending time. If you have health issues, which also are associated right now with the inequality, the country has reached a point where the demographics are an issue. The polarization is coming because the kids want to live as well as their parents did. And this is arguably the first time that it's hard for people to move up the corporate ladder and make as much money unless they already have money and they have it in the market. So their parents are worth a lot more than the kids are. And it just creates this disconnect between the way they are. And as someone who lives in Williamsburg, Brooklyn, who watch Mamdani sweep the entire place and to see what went on and to realize these are college educated kids, many of them whose parents are paying for them to live in Williamsburg, which has become one of the more expensive places in the country. I can see why they're angry. I can see they have either had they either have student loans, they had it paid for. But one thing is certain, they don't have the job that they thought they would have. And that's the other angle that gets to be an issue, is that AI is a disruptive labor job. Everyone can get a job, but you may not be able to get the job you envisioned when you were going to school. And that's the problem, is there's no more corporate ladder. There may not even be the job that you wanted available. If you wanted to be an accountant, it's very hard to be an accountant now. If you wanted to go through all of the legal professions, everything, AI is standing in front. So how do you become a partner 20 years down the line if AI is coming in 2 years?
Oh boy, that's loaded, Jordi, and I have spoken about that, including as of yesterday, the overproduction of elites. And then you look at the young people in college, and I have one, and you have children relatively in the same age bracket. And I know I'm being a little bit limiting here. Eric Schmidt comes to give a commencement, and you walk out. Like, I get it. I understand the burden you're taking on and how AI is changing things. And this definitely applies to my world of the single family office, where the average executive is over 50 years old. And I'm trying to teach them, forget investing in AI, that's pretty obvious, using it to make better decisions and be more productive. And I'm getting resistance commonly through ego, which underlying a lot of that is fear. And those are normal human emotions. So relating to what you said, and maybe also tying it into my world of people in finance and family office professionals, I ask you again, differently than how we started, how do we get people to want to learn and take that first step?
I wish I had a better answer for this. All I can tell you is how I feel and how I try to bring that message to my children. I grew up very poor. So my father was a construction worker. He was a core driller. We didn't have money. I mean, I lived on canned vegetables and bad ground beef for most meals. I just don't literally think like a victim. I don't believe that the world keeps me down. I started my own business. I was in the hedge fund industry. I was at Morgan Stanley. I had 2 separate successful careers, and I could have stayed in that. And I decided to become an AI consultant to help people like your clients, to help people retail, anyone across the world. And I've had huge, my business is growing so rapidly. And part of it is because I'm helping people get away from the noise. So from an investment standpoint, they can make money. I'm helping them with agency and the ability of taking control of, like you said, the learning. You can learn at any age. In fact, the best learners have been, and this is probably the most exciting thing I'll say on here, and I will attack the 20 and 30-year-olds to some degree, just in terms of, again, this Williamsburg thing. But the greatest thing has been the 50-year-olds that I've met whose kids are like ours, they're at college. So they're either empty nesters or whatever, but they have the time to learn AI. That has been the most powerful bracket. Now, the reason I bring them up is I also had a lot of people in that age bracket that lost their jobs on Wall Street just because of their age and their cost. And they were replaced with younger people. And those people would come into my office and say, how do I do what you did? How do I transition into the hedge fund industry? How do I got to make more money? And what I heard from them was kind of this victim side. The same thing I hear from the people, a lot of them in Williamsburg, saying their boss doesn't know what doesn't appreciate them. I didn't sign up for this. They're hard on me. I don't want to work these hours. I don't want to go into the office. So I see where this is. I just pray that everyone starts using artificial intelligence and realizes you control your own destiny like never before, because you can build things and you can learn new things every single day. And so I'll just leave it at that. I don't understand that concept. My kids don't. They have to work. And maybe it's because I grew up with someone who worked so hard to make so little that you just appreciate the fact that if you have an opportunity, you should grab it.
I come from a similar background, Jordi, and we're actually, I think I'm a pinch older than you, but we're very much in the same genre. There's a saying that I said yesterday. I've said it before. I'll clean it up a little bit. Weak people think the world is against them. Strong people don't care if it is. You cannot be successful with the victim mindset, even if you're somewhat correct. I get it. I'm half minority, grew up in a broken home. There were things that were against me. I didn't have the advantages, and there's millions of people more successful than me. But we have to overcome struggle. I learned how to get up at 5 o'clock, how to put in the grind. I had a hard head. I was slower to learn than others. Maybe I have limitations. That didn't stop me from moving forward and adapting as I went along. But let's move on. Jeremy Grantham, a titan in the world of finance. I heard him, and you're a podcast junkie, recently on Diary of a CEO. And I also watched Tom Bilyeu's breakdown of the video, which wasn't too much of a breakdown. He basically agreed with everything. For an 87-year-old, Grantham is sharp as a tack. He says many things that make sense, and we all could learn from him. But he's calling this a classic. Maybe he's right. You could disprove it. A late stage bubble. Is he right? Is he wrong?
I mean, first of all, he's wrong because the word means nothing. So, I'm going to go back just a little bit because you use the word that whenever I speak, success is something that is personal, meaning everyone can determine success differently. There is no definition of it. There is no, you were successful. What does that mean? It depends on what you believed. If your parents thought, if your father made $1 billion and you ended up making $1 million, that person wouldn't be viewed the same as someone who made $1 million and their father made $50,000. It's just a personal thing that comes down based on some random stuff. I think the same thing always happens with bubbles, because here's what everyone who says it's a bubble, when you ask them, when does it end? Oh, we don't know. We don't know when the bubble ends. We just know it will end. So let me get this straight. If a stock goes from 1 to 20, but then it goes from 20 to 200, and you say at 20 it's a bubble, and then it goes to 200 and it falls to 100, were they right? Jeremy Grantham has been doing that forever. So I've never met the man. I find everything he says, everything, you're a better person than I, everything that he says to be the exact same view over time. I have never heard him. He's been waiting for the market to get to a single-digit PE for a long time.
Yes.
It hasn't done that. So the fact that it hasn't done it for my entire career means he's been wrong for my entire career, except for one time. The great financial crisis. Yeah. And again, it'll happen at times. So I literally just did something to make it real time for people. Samsung just had its second worst 10-day performance in the last 25 years. It is still up 9 times where it was less than a year and a half ago. It is set to make this year $217 billion. Do you know this number, Angelo?
No.
Okay. So it's a Korean company. They're going to make they're estimated to make $217 billion this year.
Incredible.
Samsung is a big company. Everyone owns a Samsung thing. They might have a TV. They might have a phone. It's one of the largest companies in the world. That is more money than the company made the prior 40 years.
Wow.
This is not a bubble. That is an earnings story. So again, Jeremy Grantham doesn't use AI. He doesn't understand it. And if he doesn't understand AI, of course he's going to call it a bubble, because things like Samsung have never happened before. So he views this as, well, this is a bubble because this is overinvestment. This is people buying into something, but he doesn't know anything about AI. That's why I'm here. That's why everyone watching this who wants to learn, I don't have a bias in this. I used to be called a perma bear when I came back from Brazil. I went to Silicon Valley in 2013 to answer a simple question. How can a company like Amazon trade at infinity PE every year, and they're a book company? And I had to answer that question. The day that I did that, Jeremy Grantham was also calling it a bubble. So I did that to go figure out why I was wrong, why it could trade there. And I went to Singularity University. And so when we talk about moonshots and Peter Diamandis, my journey to what we're talking about today began in 2013. to get off of the bearish stance that I still had coming out of the great financial crisis.
Yeah, I mean, I shouldn't say this. It's not going to do me any favors. Listen, Diary of a CEO, Chris Williamson, Billy Yu, I like them all. They're 1,000x more popular than me. They also have teams and teams of researchers and people. Some of them effectively have private equity backing, spend six figures per episode, sometimes promoting. Could you do a better job of making your guests? Now, I'm not maybe a good representation here because Jordi and I, outside of maybe the debt, probably agree on about 95%. But I think I'm somewhat known for making guests sometimes feel a little uncomfortable, especially since I don't have a huge amount of followers. Like, why am I going through this shit with Angelo when I don't really need it? Like, I find it very frustrating that Stephen at Diary of a CEO, I'll never be 1,000th as popular as you. Could you challenge your guest a little harder, please? That's just me talking. Grantham, an asset gatherer, happy getting 6 or 7% a year. Now, we've both been a little critical of some things with him and with Dalio. We hinted at it. I think later in our interview, there'll be deeper things where we may have different perspectives that we could bring up. But I'm going to throw another name at you, Jordi. You're getting some of the ones that you may disagree with. The very intelligent Michael Burry stated the AI narrative may die a death by 1,000 cuts. And he does bring up some interesting things relative to kind of chip longevity, creative accounting. I don't think he's like incorrect, but you may have a different perspective. Tell us more.
He's another perma bear. I don't know how to say this. So I'm gonna use an analogy. In the world of sports, I just watch my favorite team. I have a basketball up here, signed by Bernard King. I'm a huge Knicks fan. Mike Breen, the announcer of the NBA playoffs, did the game. He's a huge Knicks fan. He doesn't go on there and set and call the game from the perspective of a Knicks fan.
Not at all.
He's balanced. I can't listen to a single person in life who has one opinion. I don't know why other people do. The only reason Jeremy Grantham is on and Michael Burry he makes over $20 million a year in a newsletter now being bearish. Why would anyone listen to him other than to go find? And like you said, they're both smart. Jeremy Grantham's very smart and Michael Burry, they're both very, very smart. But they say the same thing always. So I don't have any value in that because it's a waste of my time. I can go into AI now and say, give me Michael Burry's latest views. And where do you think he's being bombastic? And where do you think he has some reality? Where are the interesting points? That's the way I use it. I don't throw him out of AI. I just don't get caught listening to him because it's the same story over and over again. And in a world of my life, every minute matters to me. You only get so many minutes on the planet. So to waste them on Jeremy Grantham and to waste them on Michael Burry, to me, is a complete waste of time, but to each his own. And these guys are very popular. So they're like you said, they're more successful than me in many, many measurements. For me, they're not my cup of tea.
Oh, you're giving me so many good short clips. Thank you, Jordi. And they will. And by the way, Jeremy Grantham, during COVID, I don't know why, he did appear on my show. He only insisted to talk about green energy. I couldn't ask him anything else, but it's up there somewhere years ago in my platform. And 2 years before that, I met him. He actually spoke at my New York event. And again, he's very eloquent and smart, no doubt about it. Here's a question that I think you may disagree to some degree with the premise of if AI takes jobs. But let's talk a little bit about it. Every AI forecast that no one kind of a question they really followed to the end, kind of the retail bid, the 401k, the paycheck deducted into index funds, whatever, every 2 weeks. If the structural buyer of American equities, so if AI takes jobs, effectively, who's buying the stock and where's the money being pumped into these equities?
Again, the market's being driven by earnings. So whenever people ask the question, who can buy the stocks? Who can spend the money at this? The government is spending each year 5 to 6% above the revenues that they're taking in. So we're in an expansionary monetary situation, and that is contributing to the growth that we're having in everything. And revenues are growing, so there's a multiple on top of it. At some point, this game will stop. And I do want to make sure people realize, because I don't know if we've talked about it, but I don't have a positive view of assets in general past 2030. And I think we're seeing some of the signs of that. So I don't want people to think that in all of this stuff of me saying that I've now embraced this perma bull side. I think AI is the most disruptive force. I think crypto is the second most disruptive force. And I think all of these are going to come to a head by 2030. And that's because of reaching AGI, which is happening now, reaching ASI, which is going to mean solving a lot of commodity issues, a whole bunch of things. But most importantly, what we're witnessing already is instant competition. Competition comes out of nowhere. And everything in assets is based on time. How much time do you have for moat? The S&P 500 is not a company. The S&P 500 is an index that is amorphous, that changes over time with new entrants and new losers leaving. At some point, if the thing speeds up so fast, which is what AI will do, you will have destruction of many, many public companies. So I've said repeatedly that I don't know which companies that people own will still be here in a decade. I honestly don't know if any of them will. You cannot compete with AI, and you've seen that with Salesforce.com. You've seen that with Adobe. So part of my message to everyone on this stuff is just, there is a bearish argument, but it's not a bearish one, meaning then we're going to go through a recession, then we're going to go through a depression. It is one where your investments may not work as well as you think as an aggregate number, and that people, if they want to make money, they probably have to take more risk than they realize to do that. But they're absolutely going to have to think outside the box and not listen to people about what history says. And that's the most important thing. Every day is like 5 yesterdays. That's how fast things are changing. And if you have that kind of pace, you're looking at something a decade ago, which is like paying attention to something 50 years ago. And if you go back to something 50 years ago and I said to you, do you think this could ever happen again? The answer is usually no, it's not going to happen, because innovation gets so far ahead of the past that we're never going to see kids riding around in the backseat of a car without a car seat. You make progress in life, and eventually you get to the point that there's no way to go through. So I want to make sure people leave, they hear that from me, because this is not a perma optimistic story. I actually do believe that what you said, the market's going to continue to go higher because we're spending tons of money. And most importantly, we're not at that moment in AGI. And you're going to see just tremendous productivity leverage coming up in the next 5 years.
Jordi, I did hear you state that potentially all the companies could, quote unquote, turn over, and let's broadly go whatever, Fortune 500, S&P 500. Looking back over 10-year blocks, I think that organically has happened at probably 50 to 55%. But now we're in a different world. AI is a technology that we've never seen before, and it's changing everything very quickly. You're implying it may theoretically be a complete turnover, perhaps even in 5 years, let alone 10. A lot of people are going to understand the Mag 7, companies like NVIDIA, companies that have maybe struggled a little bit like Meta and even Gemini in the current AI race. It's hard for them to imagine. Maybe like IBM, it was top of the hill in the 80s. It still is around today, actually doing interesting things in quantum. When you say go away, do you mean completely disappear, or just become not as relevant in whatever 5 years may look like?
Yeah, I think the best way to think of it, irrelevant as investments, meaning if I asked everyone, how is Ford as an investment? Everyone would laugh, but it's still part of the S&P 500. So I think what you're going to get to is two things. And this is a little entree for people who either don't believe in crypto or just haven't thought about it. You're all thinking about crypto every single day now. And it becomes very important for what I'm about to say. If I said to you, how do you trade Anthropic and OpenAI right now? Well, okay, if you understood that until recently, you could go to Hyperliquid and you get a valuation on these things. Hyperliquid is a crypto site. If you want to do Kalshi or you want to do Polymarket, well, now you're getting into crypto again. The reason those are important is you've probably heard the word tokenization. Tokenization is the merging of the digital crypto world and the public world that you're used to. It means private companies become public companies immediately because everything is tokenized. So you can trade Anthropic as a private company, you can trade Apple as a public company, and now they're all just tokenized stocks. They're all tokenized. That is how the capital structure is going to change. That goes beyond most people thinking. Tokenization is a real thing. I spoke about it on the New York Stock Exchange at a major event over the course of the last 6 weeks. They had in every major brokerage from Korea in the New York Stock Exchange. I was there for the closing bell. I spoke on a bunch of interviews there. It was all about my vision of tokenization, but they envisioned this happening before the end of the year for the New York Stock Exchange. So tokenization is a real thing, the merging of the world. And that's why when I say the S&P 500, I actually don't know if the S&P 500 exists in the way that we think it does in 5 years, because tokenization is going to change the entire capital structure and the entire way that people transact. And remember, this is going to be a 24-hour-a-day trading thing, just like Bitcoin, and it's coming very, very soon to everyone.
Jordi, let's rock this. I'm really into it. I've spoken about this to my members and they basically think I'm crazy. You might actually agree with me. I believe everything on earth, including private homes, the total assets are what, about 1.5 quadrillion? In other words, take a trillion and it's 1,500 of that. It's a huge, huge number. I believe 97% of that is effectively illiquid. I mentioned the private homes, private businesses, equipment. There's a variety of different factors. Imagine the advent of tokenization. We have stable coins. We have governments getting more behind quote unquote crypto. I agree with you. I think you may agree with the math that I just laid out. How, as an allocator, an investor, or a family office, can I understand that math and realize that I may need to be allocating to this, and how?
So first of all, the number you gave, that must include government ownership and other things too. Household net worth across the globe, meaning the assets that fit into the house, the ownership of people, not governments. UBS puts it at about 700 billion to 800 billion. I've been using, just for an example for people to kind of have it easier, is about 500, sorry, trillion, not billion. And I've used this thing that 2/3 of that are what I call dormant assets. So the same concept you're doing. So let's take it from 97. Let's just take it from 67, and things that are important to people spending. They're important to the way the economy is measured. The reason this is important, GDP, the way it's measured, is going to explode because the money supply is going to immediately grow rapidly. If 2/3 of all of the assets on the planet owned by people are dormant, meaning they can't transact, you can't walk into a coffee house and buy it with your house, a piece of your house. So all of those assets are going to become tokenized, all of them, to your point. And this just means the money supply will grow overnight. The ability for money, the liquid side, will just start transacting. And for an allocator, the reason they have to be aware of this, it's not going to happen in 1 year. It's not going to happen in 2 years. It will take some time. But this is why I said the velocity of money, which is a critical component of GDP. The higher the velocity, the higher GDP. You're going to have more chance to move your money from a house that maybe is getting you 6-7% and move it to something that can produce 20%. It has to be done across the financial guardrails, which will now be crypto. So the reason crypto is important, and again, I think I spoke, Angelo, in 2024 at your event in March. Well, that was a long time ago. And I mean a long time ago in the fact that Donald Trump was not president. The crypto approach was not there. Scott Besson gave a speech in the last month where he laid out as a critical component of it tokenization, crypto, and how the US will be the leader of this. If you don't think the financial guardrails are an IP that the US wants to own, you guys are not paying attention. SWIFT, we use this all the time for sanctions. Crypto is critical to the United States of America and their plans aligned with AI agents, the same way humanoids are important for war. So all of this stuff lines up the same way. And that's why tokenization is directly connected to every allocator's decision going forward. And you can either think about it today, and trust me, in the same way that AI, if you would have committed the time in 2022 when ChatGPT was launched to spend a lot of time on AI, you'd be the one doing this interview with Angelo. If you don't pay attention to tokenization and the crypto financial guardrails, and you don't spend the time on it today, you will be in that same position 2 years from now, a lot less than ChatGPT. That is my belief, and that is my story on the dormant asset side of the thing, which Angelo said. So we're on the same page.
We got about 35 more minutes left with Jordi. A lot of questions to ask. I do want to engage the audience, so feel free through the chat feature to jump on in. Maybe just in building upon that a little bit, Jordi. Years ago, I got into Bitcoin. I was very active. It sounds embarrassing now in NFTs, mainly around COVID, but the promise of verification and what NFTs could mean relating to Web3, relating to blockchain, and what we just said, and Larry Fink and others have spoken about, and you mentioned Besant, the US government, a lot of the acts and clarity and all that with the current government. This is obviously a trend. You and I tend to be future forward, and at least in my industry, and I've been in it for decades, I tend to be ostracized because, like, that guy started to talk about Bitcoin in 2013. I've been on AI heavily for 2 years. Sometimes being future forward and ahead of the curve, maybe too early, is not always to our benefit in industries, mine and yours, which intertwine but are also somewhat different, that want the status quo, where it appears that way, and people that may be a little older that don't quite understand how things are changing rapidly. How do you put this all together for people in finance where the idea of AI and Bitcoin and tokenization, they're having a harder time allocating because they got to take money from somewhere to put it into that, and they feel they have to justify it? That may be volatile. How do you help them overcome that?
Okay. First of all, just answer that last part first. So if I said to everyone in Bitcoin, if I asked everyone, what's the volatility in it? So the volatility in Bitcoin is now down to about 30. The stock market this year is completely dominated by the AI trade. I have a thematic portfolio that I release to my subscribers that has 100 names that are directly connected to it. It's my version of what the S&P 500 will look like in the future based on all of the progress happening, everything related to data centers, to agentic world, everything. The issue with it is when I go through this and I talk to people, I'm like, are you invested? Did you invest in Micron? Yeah, I did. Okay. Micron has a 90 vol. It's 3 times Bitcoin. This has never been about volatility. This has been about what the book Sapiens pointed out to all of us, which is human beings need stories. And they can attach themselves to people like Jeremy Grantham because he's very smart and he can talk about the numbers, he can talk about history, and it sounds very compelling. Like you said, you can go back over history and say, well, the last time we were at this level, this happened. You can't do that with Bitcoin or with crypto because it has no narrative. The narrative is missed. So here's what I want to get away from the volatility and just give people a different way to think about this. The Bitcoin white paper came out, and I think at that point people got embraced with this is a thing to get away from fiat currencies. This is something to break the system. You had Charlie Munger speak out against it, Warren Buffett. You had all of these people speak out against it. I view it now in going back, and I'm going to bring up why and connect it back to my Amazon story. It came out to solve a problem, which Mark Andreessen wrote about in 2012. And I'm sure everyone knows who Mark Andreessen is. They may have invested in his funds and they respect him. He's one of the smartest people on the planet as far as I'm concerned. I think Mark Andreessen is a visionary. I think he also studies history. He was a Democrat. He became a Republican. I go back to the Michael Burry and the Jeremy Grantham thing. They've never changed their view. It's bearish. Mark Andreessen shifted. He talked about why he did it. I love listening to people who have flexible minds. But he said in 2012, that Bitcoin is the third most important of a trend, most important thing. Now, this was 4 years after the white paper. And the reason he said that is it solved a problem once he read the white paper of digital money. So forget replacing the dollar. Forget it's for terrorists. Forget it's to hide money away from fiat. It's digital money. It is the money of AI agents. AI agents cannot use something that takes 5 days to settle. They move faster than us. They actually need this. So in 2021 or 2020, during COVID, when we all sat at home, I spent a lot of time on anti-aging, longevity, and understanding the microbiome and HRV and all of these things I care about. But the other topic I spent a lot of time on was Bitcoin. And the reason was because my son had turned $700 into $80,000. He subsequently lost it all, which is part of growing up and part of going through this. But it wasn't the money being made and lost. It was his knowledge about the tokens and why they were important to him. It was when you ask why you see your kids playing video games, you see them really viewing entertainment different than we did. They don't like sports. It's too slow. They prefer video games. Bitcoin represented to me, when I studied what he talked about, it was an understanding I had that as the future becomes more computerized, as demographics shift, this whole concept of a check settling in multiple days is stupid. It doesn't match the economy we're on, and the financial guardrails do not mix it. Tokens, stocks, settlement of stocks, all of that stuff takes too long. To pay an Uber driver money and all the hands that take money before the driver gets theirs multiple weeks later, it doesn't make any sense to me. Everything will be instantaneous, just like information is and just like everything else on the internet. So I just want to make sure people realize, if you want to feel comfortable at it, read the people that I mentioned. That's the study I did. I went and listened to Mark Andreessen. I listened to Michael Saylor, who went to MIT, who roomed with Peter Diamandis. I don't care about the opinions that people have. I think this is a very important point for people. Tokenization and crypto will be a part of your lives in a bigger way in the next 5 years. Do your homework now.
Related to that, and I'll keep this question for a change relatively simple and straightforward. Do so-called smart people rather be right or make money?
It's 100%. There's no question. And by the way, as you say that. So if people want, since I've said I can't listen to Jeremy Grantham and I can't listen to Michael Burry, and I said I love Mark Andreessen. Let me give you a market person who, to me, is brilliant because of their humbleness and their flexibility, which is Stan Druckenmiller. And what you just said and what happens to me, to get back to the AWS thing, I didn't invest in Bitcoin until my son made a lot of money and it fell down, and I did my homework and I realized how this fit into my vision of the world related to machine learning, what would eventually happen. I didn't realize ChatGPT would come out the next, 2 years later, but I did know that reinforcement learning and neural networks and all of these things, reading Ray Kurzweil, knowing Singularity, that this stuff was all coming and that it couldn't survive without digital money. So when you listen to someone like Stan Druckenmiller, who has spoken about Bitcoin, he might say he doesn't understand it, but he said the reason it will always be here is because it's a brand for younger people. It's a very simple, elegant way of saying something, as opposed to going on TV and saying, this is a joke, I should never pay attention to it. And so I do think, to your point in this, the people who don't embrace Bitcoin, they don't care. They don't need to embrace it. And so they don't need to embrace it. So they want to be right. And when something has already moved up this far and they didn't participate in it, there's a very big danger of buying something that's already gone from $1 to 60,000 and then watching it go to 30,000. That is the ultimate failure. Nobody wants to be wrong. That's what the school system teaches. And I think the failure of that is there. I got out of Micron after riding it publicly from 60 to 600. It proceeded to go to 1,300. I didn't change a single view. But now that we've had 2 or 6 weeks of a correction, I might be buying in at 850. And I said to myself, you may have to buy this thing much higher than you got out. I need to do that regularly to just show my ego that it's not the decision maker. The decision maker is, it's clean. I have no position. What's going to happen from here?
Jordi, I'd love to get through at least 10 more questions. Let's get to it. You've been on it a little bit for 10 minutes. So maybe a final question on Bitcoin. We've all been disappointed really in the last year to year and a half. You admit that you've been wrong relative to its price action for much of the last at least 12 months. What makes you think it's still valuable? It's going to go up? And what might it look like by the end of this year?
Yeah, I expected it to be far higher than it was even at the peak last year. So I've been wrong on that. And I just talked about how I was wrong on Micron getting out at 650. So I'm wrong almost every week in something. The good thing is I've always been a believer and try to find things that are asymmetric. So in the case of Bitcoin, here's the main thing. After Donald Trump became president, having traded markets for a long time, part of the reason that I thought it would go up much higher is because it defied something that I hadn't seen happen before. Meaning, people may forget this, but the year of 2024, effectively you had the ETF, and then you had the United States elect a president who embraced Bitcoin, who said crypto is going to be a part of this. Now, I always believed the biggest risk in crypto and Bitcoin was never quantum. I always believed the biggest risk was that governments would just continue to delay its inevitability for a long time. The fact that the leaders of the free world and the leaders of the financial system were the ones to embrace it, and the voting, in a lot of ways, Donald Trump was elected because of his stance on crypto, which was a brilliant way to make sure that he got a very, very fast growing, followers. I think where we are very simply on Bitcoin is this. AI accelerated with Opus 4.5, which occurred in November. The Fed, for December of this year, the Fed was expected to have 150 cuts as of October of last year. I have shown a chart in my subscriber videos that basically Bitcoin has followed the probability of rate cuts. We've gone from 150 as of September to now by the end of this year, we have 40 basis points of hikes built in. So Bitcoin followed the path of future money supply being tighter. I believe the Fed is not going to raise rates. If they do, I think he would have to do it now, meaning July. There's your first little surprise side. And the reason I think that is if he was interested in credibility, why not just come out of the gates, do 25? If they're interested in the long end coming down, that would guarantee it immediately if he's going to say that he's going to raise it, especially when we're going to have a negative CPI print. If they don't, I think this is the beginning, and I've publicly said that I have technical reasons to be bullish on Bitcoin right now as a bottoming sign, but I also have the other part that I mentioned, which is when Opus 4.5 came out, all of the dollars in the world went to the agentic world. And it made sense because Micron went from 60 to 1,300. It was a 20 bagger. Those are crypto type moves. You're not going to get those anymore in any of the AI stocks. You're now going to get your boring 30 to 40% a year on the infrastructure names. And it's not going to happen with a good volatility. It's going to happen with a higher volatility than Bitcoin. So I will say to everyone here, by the end of this year, I believe fully that it will double. And the only way that's not going to happen is if the infrastructure trade continues at the same pace, which is literally impossible based on what we've seen. And at the same point, the Fed is going to be more hawkish, meaning Donald Trump put someone in the Fed seat who is going to disrupt the midterms even more than what it just doesn't make any logical sense. So I think you're going to see a big change, and I think you're going to see the dollar weaken, and you're going to see Bitcoin go higher.
I'm going to mention some public equities. And again, please, everyone, do your own diligence. Conditions change. Jordi's opinion may change tomorrow because conditions change and there may be other opportunities that are simply better. But I know my audience is going to enjoy. And again, one more time, everyone do your own diligence, make your own decisions. When you invest, you could lose money. Theoretically, you could lose all your money. So with that wonderful side note, I'm going to name a couple of equities and may ask you to name some. So we have the so-called, we don't use the vernacular maybe quite as much anymore, the Mag 7. We have some like NVIDIA that have done great and look good relative in the future. You may have a different perspective. And we have others that have stagnated like Meta and others. If you had to choose from only the Mag 7 and looking relatively short intermediate, 1 to 3 years out, Which one do you think is an anchor in a portfolio?
Well, I literally just posted an X yesterday about NVIDIA trading at decade low valuations, basically being left out in the dark right now. So NVIDIA would be the one, but I'll be honest with you right now, all of the Mag 7 are interesting to me. And the one thing I left out with Bitcoin, which fits into the same place, the Mag 7 have acted horribly this year too. And the reason they've acted horribly is because all of the money was going into this AI infrastructure trade. So if the AI infrastructure trade is lower, one catalyst is coming. So I made the Apple conversation. If Siri, by the end of this year, which I believe it will be, by the end of this year, I believe you will be able to talk to Siri with your phone off and actually have an intelligent conversation. That would be the beginning of the consumer agents, which would also help Meta. Meta came out last week and basically said there was a leakage from a town hall meeting with Zuckerberg. And he basically said, all right, so here's the problem. Agents are not moving ahead as fast as we had thought. Now, that is not coding agents. That is consumer agents. If consumer agents accelerate the way Apple and Meta are talking, it also is going to impact AWS, meaning Amazon. It's also going to impact Microsoft. So I think all the Mag 7 are going to do well. If I had to pick one for the next 3 years, it would definitely be Tesla. But from a stable basis for your audience, since I'm sure most of them wouldn't touch Tesla just based on the crowd that I met at the side, I think I'm going to take NVIDIA, which is cheap. It's going to grow 30 to 40% a year because the build-out's going to continue.
Okay, you mentioned it. Tesla. A lot of people think likely some merger upcoming with SpaceX. Assuming a melt-up, would you be that shocked? And I think 10 years is a long time. Let me knock it down to 7. Do you think that could be, and I know Diamandis and others have mentioned this, in a 5-year window? I'm extending it to 7 years. And I admit it probably needs some market melt up. Could that collectively be the first $100 trillion company?
I'll say no, but I appreciate the fact that people are looking for the TAM of space to be worth something. I don't understand how that can be any different than Bitcoin being worth anything. So I'm going to say no, it won't get to that. But at the same point, I will say if he hits on humanoids and he gets rockets to go into space and come back to Earth next year in some way that he can do it multiple times in a day, then I think you're going to talk about something which will be the biggest stock in the world, because he has organized and combined every single thing about the embodied AI future.
You're big for those that subscribe and hear you on Pomp and your solos. And by the way, I am a subscriber. I think Jordi's work is worth it to spend money on. And my titling is not me just blowing smoke. I believe it. And do I think Lynn Alden and others are incredible? Absolutely. But I think Jordi is really the only one as a hands-on AI practitioner. And we didn't really get to enough on that. I think we might in the final 10 minutes. That's very special. You have been a big advocate of Marvell. Let's try to keep it 1 minute because we have other companies to lead into. Why are you so positive on the company Marvell?
Yeah. Marvell is the biggest position in my portfolio outside of Eli Lilly, which has recently become the biggest. Marvell is going to benefit significantly going forward from Vera Rubin. There's just no other way around it. We cannot have the amount to make the token cost go down per electricity. It needs to be done not with copper. It needs to be done with optics. And that's where Marvell has built their entire business. And Jensen Huang said they would be $1 trillion company in the next 3 years, I think he said, very recently. Let's assume it's the next 5 years. If they get to $1 trillion, they're about a $225 billion company. That's a 4Xer. Marvell is my favorite semiconductor name right now.
I heard you say, I believe it was on Pomp, that within a couple of years that Eli Lilly will be the largest company on earth. Why?
Eli Lilly, which I've been building every single week now. This is going to be the most amazing story of a company that basically has made a mint, creating something which is curing the most important disease in the country, which is obesity. It has not yet been able to do this at a level where everyone can afford it. That is coming. They've made more progress with now going from GLP-1s to GLP-3s. But here's the most important thing. They have built their own data center using 1,000 Blackwell chips. That is being used to basically solve every disease. They're using all of the data they have with this. They have another thing set up called TuneLab. TuneLab is where they're taking other data from other biotechs. So think about IP going into their thing. They're sharing their information, an LLM that they built with these companies. And the only thing that Eli Lilly gets is their IP. They get access to it, which enables them to have more brainstorming and better things. They have their own innovation lab now set up with NVIDIA out in Silicon Valley. So all of that stuff aligned. They have basically become an AI company with an infinite balance sheet. They've done more M&A this year than the prior 5 years combined, buying up all of this IP in the biotech. And so I believe the healthcare application side is going to be led by Eli Lilly because of the amount of cash they have. And I will leave it this, since we brought up socialism. Novo Nordisk competes with Eli Lilly. The difference between what Eli Lilly did, Eli Lilly is keeping all of their cash and spending it on other companies. Novo Nordisk gave money back to the public in dividends. So that is the difference between Europe and the US, and it gets back to that debt situation. Continuing to invest your money back in to solve diseases and go through it. Eli Lilly and its partnership with NVIDIA is the number one theme for me.
I'm going to tease a little bit. We'll get to more of this in 5 or 6 minutes, and being a little tongue-in-cheek, but only a little. I guess Eli Lilly and other companies and maybe family offices, you better be a little careful with these frontier models. We don't want Anthropic to be, quote unquote, borrowing, leveraging, sounds like China, their ideas. And that's the value of sovereign. Let's push that off about 5 more minutes. People are going to want, we gave a couple of some ideas stock wise. You mentioned what's going into the AI build out in data centers, I believe pronounced photonics relative to light and lasers. If you don't mind, maybe share another investment idea of a public company that someone may want to do diligence on.
I'm going to make this very easy for people to look at companies that are relatively big in different areas. First one everyone should own is Caterpillar. You cannot build out the amount of data centers. You cannot go through this without Caterpillar. It is a very, very simple AI trade. It is expensive if you go back over history, but it deserves the multiple because there is no cyclicality with data centers. Modine Manufacturing, incredibly important. It is the best stock for the cooling side for this heat that is going to be produced. So on the optics side, the reason we can't use copper, it's tremendous heat. You need tremendous cooling. Modine Manufacturing. And the beauty for all of you, I've been writing about an AI mid-cycle slowdown. I started writing about this at the end of May. I'm now saying it's over. We did it. It's all done. Like now we've gone through it. I don't think we're racing to new all-time highs, but that just means you get a better entry point on everything that I'm mentioning. A chemicals company, Entegris, ENTG.
Yep.
Phenomenal business, growing. That's another one. They fit in with it. As the build out happens and as we move into Vera Rubin, all of these companies are going to continue to do well. One other chemical company, Chemours, which just settled something and is going to just continue to benefit. Chemical companies are the hidden gems inside the AI build out.
I know it's popular with those in the know, and maybe you, but you may like others better, including with Leopold Aschenberger. What do you think of Bloom Energy?
Bloom Energy will continue to be a company that is necessary because we just can't get around the issues that happen with natural gas and turbines. It makes it very challenging. Bloom Energy is able to do these smaller data centers. They're not a big player in the mega data centers where you're going to have gas turbines and go through this. So Bloom Energy is going to continue to do well. I always have a hard time when a business grows that quickly and it's in the physical side because it's open for disappointments in terms of them able to meet the supply, but they seem to be able to control it. He made a lot of money on it from the past. The question is now that they've grown into this level, it's different. I will say that Fluence is a company that is a battery company, which has also corrected significantly, who just announced a partnership with Siemens and NVIDIA. You get the trend here. NVIDIA. They are a major spender, and they are the Vera Rubin side of what is going to matter a lot in the next 2 years. Fluence is a name which is absolutely probably where Bloom Energy was before, not with the same amount of upside, but batteries are a massive necessity for where we're getting to, particularly with the data center pushback.
Jordi, in our final 10, perhaps 15 minutes, let's go really quick round robin. There's just not enough compute, or so we're told, in the world to satisfy all demand. One, do you agree with that? Although it may be pretty obvious. And how do you address that in your investing?
It's absolutely true. And I'm going to just make this very simple. Number one, coding agents came in October, Opus 4.5. You said it, Angelo. The mistake that people make, we are still in the early innings of enterprises adopting that. One of the biggest mistakes is people following this ridiculous token index and hearing things. The reality is we have insane demand and we do not have enough supply. If you watch my video this weekend, you will see on my YouTube channel, as I go through this, I literally am putting together the video for this week, that you just take the earnings releases from the hyperscalers and you literally look at what was their capacity. None of them had capacity. When you go over to the RPOs, which are the orders that they have contracted but haven't yet received the cash for because they don't have the capacity, when you add in Oracle to the big three being Google, Microsoft, and Amazon, you have $2 trillion of revenue sitting there to come through. So we don't have enough supply for the compute demand. And the second thing, all we're on is the coding agents, people. Consumer agents will use 20 to 30 times more than coding agents. That is when you start using it verbally. After we get the consumer agents, which will happen later this year, full self-driving will go on the explosion over the next 2 years. That takes more. Then you'll have humanoids coming up in 4 or 5 years. That will take more. That is why this will never end, because it is an endless amount of demand that's coming.
And Jordi, let's maybe a little sensitive and relates to sovereign. So you mentioned the big companies, the Fortune 500s. In my world, the gigantic family offices. They're just earlier stage using AI. One, they don't know what they don't know. There's layers of bureaucracy. They're using frontier models that may be taking from them. I just don't know if we're going to have enough time to get super deep into that. David Sachs has spoken about this. They're starting to wake up to owning the hardware and open weight models that may be impactful to Anthropic and OpenAI. We probably just don't quite have enough time, but I'm going to state it. And again, I guess I'm used to being the bad guy. There is internal friction from not understanding frontier versus sovereign, not understanding how to maximize your value and use the products. And I'm sorry, there is, even if it's subtle, there is internal sabotage. And Diamandis and Salim spoke about this in creating a digital twin company, that a lot of people don't want this to succeed because they don't want the system that has paid them a pretty good salary to potentially throw them out. And it's a terrible word. And I understand their concern. But how do you address the issue when you're working with large RIAs? I'm working with SFOs. And I don't think a lot of them really want this to succeed internally yet.
I think the employees are against it for the most part, getting there. But I think that's what's happening to the country. When you had a partnership structure, which is what dominated the country, particularly when I got to Morgan Stanley, it was a public company. You're an employee. You don't care as much as you did if you're a partner. A partner cares about the business. You're all lined up the same way. You're getting a percentage profits of what you're going. It's a much more known distributed way, as opposed to getting a bonus at the end of the year that is completely arbitrary to some degree, and doesn't go. So I do think people are against it. On the sovereign side, I do want to give people a way to just understand this. If your business has, if your data is the IP of the firm, so let's go back to the China situation. If your data is, let's assume you're a legal firm and you're using Anthropic, they basically have access to your data. So you either trust that they're not going to compete with you, and they may not use your specific data, but if they take every law firm, 100 law firms, 1,000 law firms, and figure out the way that they solve things and they're doing things, they're learning how to replicate the business, and it doesn't have to be yours. So again, I think there is an element of this that is at risk. If your data is very important IP, I would be very wary about letting it be involved in major decisions.
I mean, my audience knows this well. I love the frontier models. I use them, Fable 5, the new 5.6. I'm careful. I sanitize it where I could, but I execute often using my own hardware, open weight models that I control, that don't touch the cloud, that don't bleed my IP. And I also build on Hermes and OpenClaw. And I use the great suite at Anthropic too. I'm just careful. And if you're in the enterprise business, finance, or family offices, and you don't know this, by the way, if I could learn it, if I could build apps and I'm 60, you could. But you got to put in the work. And whether me or Jordi or others, there may not be a lot of us in the world of finance that are actively teaching this somewhat one-on-one. Jordi, Washington is obviously considering taking stakes in select AI companies. Is this good or is this bad?
It's inevitable. So you can argue whether it's good or bad. That's not for me to spend time on it. It's inevitable. Do I think it creates conflicts? I think AI is already creating conflicts, and we've already seen this with Anthropic and Palantir in terms of the beginning of the Iran war. We've seen it recently with Fable 5 being shut down. We've seen it again with 5.6 going to the government beforehand, it being released, but Sam Altman coming out and saying, hey, you haven't been inviting me to the White House that much, and all these other guys have gone. I'd love it if you take a 5% stake, which means, Donald Trump will negotiate a 10% stake. That's worth $100 billion. And he just set up these KIT accounts and the sovereign wealth fund. So this would immediately be some kind of dividend for people. So I think it's inevitable. I don't think there's any way around it. I always thought that. And you brought up Leopold Ashburn. All you have to do is go read his situational awareness paper.
I don't think if a lot of people want the truth of what that may look like.
It's going to happen. It's going to happen.
Now, Jordi, a little, I wouldn't say pushback question. Okay, they take an interest. God forbid it's Bernie Sanders. He'll just take half the company. But even Trump's idea, which I'm not an advocate for, then OpenAI and Anthropic are going to be not only too big to fail, but how are competitors going to come along? I guess through regulatory capture. Lord knows Anthropic doesn't want that. This is going to basically lock out competitors in the future. This concerns me, and the government having a stake like that.
Honestly, I think we're past that point at this point. You said something that I disagree with. I've already kind of ended up now where, as someone who used 5 models and the top 2 models were somewhere between 50 and 60% of my time for about a year and say a half, until we got to March of this year. And then in March of this year, it is exclusively now Claude and ChatGPT at about 90%. Gemini has been garbage relative to the two. And Grok I use for Twitter almost every day.
What's your favorite open weight at the moment?
When you say open weight, what do you mean in terms of the model that I'm using?
Model that you're using that is not touching the cloud.
So I use Kimi K 2.6 from China as my open source model. And
okay, that's a pretty big program. So you must have some pretty serious hardware.
Well, that was when I bought the Mac Minis, and I used both of them for that. But it's a 2.5, not 2.6. So 2.5 is, you can run it on 2 without a problem. I really do split my time. I probably use Codex more than Claude at this point, but that has to do with the usage problems, meaning it gets shut down too much on Claude on some of the bigger things, and Codex never closes me down at this point. So that's where I am with this.
And maybe heading down to the last 3 questions, I kind of hinted at this before. Alex Karp of Palantir was on an interview, kind of made the rounds about a week ago, basically stating what I said, that be concerned about your IP. You want to have more opportunity to own kind of the means of production, the hardware, more open weight models. Now, the best models like GLM-1 5.2, NVIDIA's Nemotron, 99.9% of people don't have the horsepower in 6 figures of hardware at the moment. Things are changing to justify that. You don't appear to be quite as concerned for the average investor or even family office about that issue. Maybe give me 1 minute as to why, or maybe I'm misreading you.
Here's the thing, and what Alex Karp kind of forced people to think about, and Palantir is the only software company that's part of my 100 names. So I'm long it. I believe what he said is good for his book. There's no doubt about it. He is not a fan of OpenAI or ChatGPT, and I think everything that he said is completely right. But what the future will be, and this goes for every company, when you interview people, not everyone in your company can possibly have 140 IQ, and there's a reason. It's a bell curve. 100 is the average IQ. There's 50% below it, there's 50% above it. And when you get out to 140, there's not a lot of people. So when you hire people, if you had to hire only 140 IQ people, you're paying a lot of money for them. So businesses are all about a variety of IQs and a variety of different things. And that fits in with what Alex Karp said. There will be open source models, because in the same way that a 100 IQ person on average is going to be cheaper than a 140 IQ person that came out of an Ivy League school, you end up with this scenario of how do we get our costs down? These are all digital employees, and some of them will be free or cheap, and there'll be sovereign side of protecting the data that matters. And then there'll be some things where you don't care about your data. So I do believe that that's the way it is. I think you have to think about the decision making, the orchestrator, which is basically what Palantir does. It's the orchestrator going through and then having all of these different models where you're allocating a certain percent that no one actually knows everything about your business, but they know something, they're helping you with certain channels of it. And it just gets more complex, but we're in the early adoption phase. So this is normal.
Jordi, we didn't have enough time to get into Jensen Huang's 5-layer cake of the AI investment structure, but applications appear to be the hottest. Technically, Palantir, you kind of mentioned one. Maybe give my audience another idea of one that maybe is a little more below the radar that may be good on the application layer.
Well, again, I mentioned, I'm going to just give two sectors, the financial sector and specifically regional banks. And this may sound like something that doesn't make sense. Well, how can a small regional bank actually adopt AI? Well, that's actually the point. Mid-sized ones like PNC Bank, which are now large, but you go through kind of the middle part of the country, you're going to see a tremendous amount of consolidation in the banking side, because if you embrace AI, then all you got to do is buy a company and now take that plan and move it to other companies. So that's going to be a major, major part of this. The private equity groups did this back in out taking businesses private and then doing their distribution supply chains in China. So regional banks are going to be a big beneficiary. They've broken out. They're performing very well. The other side is going to be insurance companies because of how paper laden they are. So when you think about applications, the productivity leverage that's going to come is the ability of using all this. So you've seen Travelers, a company that you wouldn't think about as being innovative. They've been spending a lot of time on AI over the last decade, investing a lot of money, and now they're starting to talk about it in their earnings. And one other area, again, I mentioned Eli Lilly, which is an application side, but the healthcare side, biotech, all of that stuff, the same theme. IP and biotech was worth something to go public. It raised a lot of money. It just couldn't get over the finish line. Eli Lilly is buying up this IP because they believe that they can take AI, connect it to the IP, and turn it into something. So biotech as a whole is having a rebirth. It's also doing well in a year that is maybe not as good for the Mag 7. So those three areas.
Two final questions, Jordi. I'll bring up another name that's more, I think, in our age bracket than Grantham and Dalio, and that would be Jeffrey Gundlach. He told everyone his exact allocation in his portfolio, 40% non-US stocks. And by the way, Grantham was very big on non-US stocks as well. 25% fixed income, well, what a surprise. 15% commodities and the rest in cash. Okay, give it to Mr. Gundlach. Where is he wrong?
So it's more the nothing in US stocks. I actually believe international stocks are going to outperform, but there's a very important reason for it. I do believe in a commodity bull market. So I do believe that right now people should be aggressively looking at gold and silver, which have been in a correction for a while. It fits in with my rate cut theme, meaning we've gone from rate cuts to rate hikes. And I believe they're not paying enough attention to the AI side, continuing to keep wages down and the fact that inflation is insanely lower than we all would have expected given what happened with Iran. So I actually agree with the fact that international stocks are going to do well, but that's because you've seen what's happening in Korea. I mean, for everyone right there, the first half of the year, the S&P 500 was up 10%. The Nikkei was up, I think, 50. The Kospi was up 100. The Straits Times in Singapore, I'm doing something on them today. They're raging. There's a reason, because they are manufacturing heavy. They are not software heavy. They are commodity heavy, not software heavy. They are semiconductor heavy, not software heavy. All of the Mag 7s still have high multiples. So even though I think they're all probably going to go higher from these levels, I don't think they're going to be better than S&P performers, and I think the international stocks will continue to outperform as they have. So I'm not completely against what he said. I just think zero U.S. stocks is ridiculous.
Jordi, final question. We almost went down the road, might have skirted around it. You and I are both people that actually build agents. There will be billions of AI agents. There will eventually, in relatively a few short years, be more AI agents than people. They're going to work 168 hours a week. They don't take time off. They don't get tired. They sometimes do break down, and they get either fixed or replaced very quickly. This is going to be a dynamic in many different ways, including the utilization of stable coins and other crypto or forms of agency and monetary value that they may even create. What impact is this going to have on really everyone, investors, and maybe an allocation to stable coins or other type investments?
Well, again, so as part of my expansion of my business, I will start in September or October the same YouTube type approach that I do, but this one will be exclusively starting from crypto and working a little bit backwards, meaning showing people the stuff that's happening in crypto and connecting it back to AI in this. And so to your point, again, we've talked about some of it. Tokenization is part of crypto. As more tokenization happens, you're going to have dormant assets become alive as cash. And that just means higher velocity of money, which means higher GDP. At the same point, as stable coins are going, you're getting more cross-border volume. You're getting more cash transactions. I have shown that Bitcoin is the S&P 500 of digital assets. So for people to understand this, I've created a 40-name crypto index, which has 34 tokens and 6 public companies that are in 8 different verticals. Think of them as sectors. When you equal weight all of them, the chart is exactly the same as Bitcoin. Bitcoin is the S&P 500 of the future for the digital asset world. So when I want to invest, I could either invest in 40 names, but the performance is incredibly correlated to Bitcoin. I only choose Bitcoin because those are innovations. And the only way that'll work out is, like I said before, there is no S&P index. These are going to change so rapidly. Ethereum works today. Solana works tomorrow. Sui works the day after. You don't know who the winner is, but you have to keep rotating the portfolio. So that is my angle on this, is I think the agents are going to drive volumes. They're going to drive velocity of money, and you want to be invested in it. And right now you have to have 3 to 5% of your money in it. In my opinion, I would be leaning on the higher side if I was younger, up to 20% if I was much younger. And then if you're sitting there and you view it somewhere beta wise, it should be around 10.
And Jordi, in about one more minute, I'm going to give you the floor to close and how people could learn more. And given your prominence, I also get a bit of a new audience, I guess you could say, from my perspective. Hello, everyone. I'm Angelo Robles, the original founder, longtime CEO of Family Office Association, a consortium of single family offices, sold, retired, kept active in social media, and created a new private intelligence and strategy community. You could go to angelorobles.com, my name, and learn more. I am extremely active in the family office world by far more than anyone else globally in AI, not just investing, but in integration. And by the way, one of the resources that I use is the man who's a guest today. I spend money, and gladly so, on someone like Jordi and his services that are incredibly valuable to me, not just from an investing perspective, but a real user like I am, who's teaching me things on second brain, skills and markdown files, advanced things that I'm relatively fluid on, but I learned things from Jordi that are incredibly valuable. If you're a family office and would like to learn more, relative to my services and become a member and become a part of my 3 times a year immersive in-person masterclasses dedicated to AI, simply go to angelorobles.com, become a member, and learn more. Jordi, I'm a huge fan of you and what you're doing. We're so happy that you're speaking at our September 15th and 16th in New York, and likely the 4 days that I host come March 8th up on my website in Palm Beach. That's our core program. We have a lot to discuss, because so much changes, especially in AI. Forget every 3 or 4 months. Literally, we're living through it right now this week, every week. I'll give you a chance to share for those, including family offices, that would like to learn more about your services. And while you're doing that, I'm going to pull up on screen so people that are watching, it may be a little easier visually for them. I will give you the floor right now. It's all yours.
Well, first thing, Angela, thank you. And we have known each other a long time, but I do want to say this to everyone who hasn't used you as much as they should, and for the people who are new. Part of being successful in this, I use the term waste of time. Time has never been more precious. You can learn more things and do things in a short amount of time. What you're seeing on the screen, I put together in, I think, 30 seconds about 2 weeks ago. And I just told it what I wanted. I pasted a picture and I just said, do it. I can create a presentation in seconds. By speaking to people like Angela and myself, you're developing a community that doesn't waste your time because they actually embrace AI. But more importantly, Angela and I are both around 60. So I'm 59, he's 60. You don't find a lot of people who can talk about AI. I didn't know any of the questions Angela was going to ask me. I didn't prepare anything. The ability for us to converse on topics this challenging, I'm sure there was some that you didn't understand. That's what I'm trying to do. I've called this Signal, Alpha, and Agency. The signal part of what I do is, if you're listening to Jeremy Grantham, you're going to be entertained. If you're listening to Michael Burry, you're going to be entertained. But I guarantee you they're not going to make you money. If you come for Alpha, I'm giving you the names on the site, meaning you can have the 100 names. I have a 10 name index that people can focus on in 25. And the agency side is something very important, which we didn't really discuss, but I'll just say it here. I have one thing that I gave out to my subscribers a month ago, and the response has been overwhelming. I don't know, Angela, if you have this yet, but I gave out the instructions of how to create a Jensen Huang knowledge brain, which is done.
I got it.
Yeah, you did. So the way that this works is I created something that it just goes to YouTube and it takes all of the transcripts of Jensen Huang that he's done this year. And that is what you're working on your quote unquote LLM. It does it in co-work. And so that is the only information that it basically has from Jensen Huang. And you can ask it, go into the internet if you want, but that is a brain. And people have done it of mine. Multiple people have taken all of my transcripts from my video and created a Jordi brain. You can do it with your favorite fantasy football person. You can do it with anything. The reason I bring it up here is, as people have done it, it has opened up the door for empowerment, and that is the agency side. It is very hard to get started with this, but once you do something that takes 30 to 45 minutes, you feel proud, you realize the potential of it. It leads to a lot of things in your workflow. It will change overnight, but you have to do that first kind of complex thing. And rather than me give something where it's just a prompt and you just put it in and you press go, this is one where you actually have to do a little bit of work, but I give you all of the instructions in there. And within 45 minutes, no matter what your experience is, you will have built a knowledge brain that allows you to ask questions. Hey, if I'm what would Jensen Huang tell me to invest in today based on what I just saw in X? And it will give you an answer.
I mean, I'll add a little bit to that, Jordi, if you don't mind. Jordi's work in that arena, and I know many of you, second brain, what is that? Actually, it's not that hard. And you better know it. You better be familiar with people like Andre Karpathy. Pardon me, I messed up his name. I have dyslexia. What can I say? Jordi's work in understanding that and being a subscriber, anyone, I don't care if you're not fluid in technology, you will be able to do this. His work is incredible. I'm a big advocate. And for my members, they get 2 books totaling 500 pages that I wrote that talk about advanced topics like skills, markdowns, second brains, building agents, building my own software programs, and helping family offices do the same. So Jordi's work is incredible. I'm a huge fan. And for those of you interested, go to angelorobles.com, especially if a family office, and jump on in. And Jordi is a part of that at certain programs that we do where it's a very deep dive and you get to meet him one-on-one. I really enjoy his services. They're very valuable to me. And Jordi, I guess on that note, we're both so happy being in the same age bracket that our New York Knicks, my favorite era was probably Pat Riley's 91 through 94. My favorite player was Anthony Mason. I kind of like the lunch pail kind of guys. You go back a little further in your Knick fandom, but, kudos, Jalen Brunson, the whole team, Mike Brown, you did an incredible job. Very proud of the team, and let's run it back and do it again. I'm sure you'll agree, Jordi. Where Jordi and I do differ, Jordi, you're also a Mets and a Jets fan. That's a tough one.
As far as I'm concerned, I got all I needed. The Knicks were my number one team. Everything else, I don't care if any of them win a championship. Honestly, this was the greatest experience of my life. And I was at Game 3 and Game 4 in Madison Square Garden. I've seen hundreds of games from the Knicks, starting when I was a kid that would take the train in and sneak in the back door with the Harry M. Stevens people selling food there and cotton candy. And I would get into the place, not have a seat. But since there were no people there, I could sit wherever I wanted. So I've come a long time with the team. It helped me develop as a person, probably helped my risk-taking. Is a longer story there. But I'm just happy. I don't care if I'm a Mets fan or a Jets fan right now.
I mean, you mentioned Bernard King earlier. That lit me up a little bit. If you mentioned Anthony Mason, I really sadly passed away a couple of years ago. And Game 4, so you saw one of the greatest plays ever to end a game in NBA history, let alone the finals. That would be the OG tip-in. So that was incredible to watch here with my son at home. I'm glad you were there. Jordi, I've took way more of your time. I'm so sorry. You're an incredible guest. I hope my audience appreciated it. And I look forward to seeing you in September. Thank you.
I'll see you soon. Thanks, Angela.
My pleasure. Thanks.